In a victory for freedom and a defeat for the globalists, the score is now officially Canadian truckers 1, Justin Trudeau 0. And speaking of petty tyrants, there has been a lot of discussion on Bitcoin Twitter about no-coiner friends, relatives, and haters, and if you should even be trying to orange pill them right now. We will get into all of that and more on this episode of the Bitcoin Bulletin Podcast. This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy. Guten Tag, buenos dias, morgen, and welcome to episode 197 of the Bitcoin Bulletin Podcast. If you've been listening to this podcast long enough to recognize the sound of my voice, you can probably tell that I am still on the road, still using my portable setup. And so I had planned on being back in the Bitcoin Bulletin Podcast studios. Well, I was planning on arriving back in Florida yesterday. That didn't happen. So here I am recording, and I'm recording a little bit earlier than normal. I'm recording a lot earlier than normal because I am going to attempt to make my way all the way across the country tomorrow, or today, I guess, later today, in what is probably a fool's errand with the severe winter storm barreling down on much of the country. In fact, I've gotten 3 emails now from the airline saying, "You sure you really want to do this? Severe weather is not only impacting your route, but other feeder airports, and there's a significant chance you ain't going to make it." But I got to get back, so I'm going to give it a try. If you're the thoughts and prayers type of guy, maybe keep me in the back of your mind. Fingers crossed that I don't get stranded in Dallas, Texas, because they're looking at ice storms today, later this evening, and I have a connection in Dallas. And if the forecast holds, my flight's supposed to scoot out of Dallas 2 hours before the winter storm warning hits. If I get delayed, then I'm probably spending the night in Dallas. That wouldn't be the first time I got stuck there, but they're supposed to have an ice storm for like two days, like starting Wednesday night, tonight, I guess it is Wednesday. It doesn't feel like Wednesday because it's super early. It's the wee hours of the morning here. Might be bright and sunny where you're at though, because it's certainly the middle of the day in Europe for European plebs listening to the sound of my voice. But again, I normally do this podcast and squeak it in just before midnight East Coast time. So it's a lot early compared to normal, but once again, I'm getting a little bit distracted. The bottom line is there's supposed to be ice storms Wednesday night, Thursday, and Friday in Dallas, and being a major airline hub, that can mess things up. So fingers crossed, positive thoughts and vibes. Hopefully I'll get home to the glorious Space Coast of Florida, and this will be the last podcast on the road, hopefully for a while. But again, since it is DCA Wednesday, I was left with one of 2 choices. Either get this episode out early or late. So good morning. I guess I should have said Guten Morgen to those of you that speak German, since that makes a difference in German, whether you say Guten Morgen, Guten Tag, or Guten Nacht. So right now it's Guten Morgen, but in Germany, I guess it would be Guten Tag. So either way, once again, I'm allowing myself to get distracted. We do have some interesting news to talk about today, and we have a very important question to consider. But before we get into all of that, let's take our customary look at Bitcoin's vital statistics. At the time of this recording, we are sitting at a block height of 878,321, and Bitcoin is ringing in at $95,330 US. If you've been focusing on the price, that's down significantly because Bitcoin had broken above the $100,000 mark yesterday and this morning once again. I keep saying this morning. It is hard for me to put this into perspective, but it's been Wednesday for several hours now. I'm pre-jet lagged, I guess. Long and the short of it is, if you zoom out just a little bit, if you just look at this on a DCA Wednesday scale, we're actually up about $1,000 from last DCA Wednesday. If you remember last DCA Wednesday when we recapped our 2024 DCA strategy, we mentioned that we had only purchased Bitcoin twice above that $100,000 mark. So while there's a lot of people out there lamenting that Bitcoin has crashed below $100,000, we're actually up from where we were last DCA Wednesday. Like I said, we never stacked higher than, we stacked higher than $100,000 US twice. Once right above 100,000 and once at 101,000. So have a little bit of patience. If you've been around long enough to remember when there was the Vegeta meme that was playing over and over again because Bitcoin just kept going up above 9,000 and down below 9,000 and up above 9,000 and down below 9,000. And every time Bitcoin broke 9,000, someone would post the Vegeta meme with it's over 9,000. Plebs, it did that a lot. So seesawing above and beyond $100,000 being such a magic number psychologically, as far as human psychology goes, you ain't seen nothing yet. Again, as I've repeatedly said, we're just in the very, very beginnings of this cycle's bull market. When we look at the previous halving cycles, the all-time high before we had the blow off top was usually about 18 months after the halving. The 2020 halving all-time high was in November of 2021. The cycle before that, the 2016 halving, the high was in December of 2016. So if that holds, if history repeats or rhymes, as far as the number of blocks after the halving that we see that ultimate blow off top all-time high, cycle high, we shouldn't even expect to see that euphoric phase until late summer, early fall, maybe October, or as late as November before you really can say Bitcoin has crashed and we start looking towards that next Bitcoin winter if the cycle continues and we don't end up with that mythical super cycle that so many people are looking forward to or forecasting. If you weren't around for the Vegeta memes, just look back a couple of months ago when we had the 58K gang doing their little happy dance every time Bitcoin was at 58K. Remember that? It seems like ancient history, but it was just a couple of months ago that Bitcoin was at 58K. We didn't break 100,000 for the first time until, right about exactly 2 months ago. But once again, I'm allowing myself to get distracted. If we don't get through these statistics, we won't get to the meat and potatoes of this podcast. So Bitcoin's current price gives it a market capitalization of $1.89 trillion US dollars. Again, that's down from the 2 trillion market cap that we've only seen once in this podcast. And that was on the December 11th DCA Wednesday episode. We're still up from last week, when last week we had a market cap of $1.87 trillion. So patience, plebs. Like I said, buckle up. Things are just getting excited. And of course, every time Bitcoin is quote unquote down, that gives us an opportunity to stack more sats. And to me, the only thing that matters is the size of that stack. We're going to stack every Wednesday, regardless of the price. That's the thing about DCA or dollar cost average. But when Bitcoin crosses the $100,000 threshold, that means we're going to get fewer than 1,000 sats per US dollar. And to me, that's the bummer, not the fact that Bitcoin's under 100,000 right now. It seems insane to even mention this, but the current block height means we are 171,679 blocks away from that next halving, the 2028 halving, which if blocks come in at the rate they're currently coming in, will be on approximately March 27th of 2028, a little over 3 years from now. It seems like just yesterday we were sitting here saying that the 2024 halving was only a year away, and then it was only 6 months away, and and I kept saying, before you know it, it's going to be Thanksgiving, then it'll be Christmas, and then we'll be talking about the halving. And now we're already, we haven't even gotten through this Bitcoin bull cycle yet, and we're already only 171,679 blocks from the next halving. Maybe too soon to think about it, but again, all that matters to Bitcoin is the time chain, tick-tock, next block. You don't have to have patience. It doesn't matter to Bitcoin. For those of you who value your wealth in shiny yellow rocks, it will currently cost you 36.1 ounces of gold to purchase just one Bitcoin, more than 2 full pounds of gold per Bitcoin, as gold and everything else trends to zero in Bitcoin terms, even with gold in US dollar terms still near their all-time high. For those of you who value your wealth in pizza, one Bitcoin will currently purchase you 5,331 large pepperoni pizzas from Papa John's, as pizza trends to zero in Bitcoin terms. And that metric that has been my favorite metric for almost 4 years now, the entire history of this podcast, Bitcoin's 24-hour average transaction rate is humming right along before Taproot and before all of the spam, all of the nonsense transactions bloating the mempool. It used to be that I would say anytime we saw more than 3.15 transactions, I rounded that down to 3.14 because pi. that was a good, healthy amount of on-chain activity. And that usually meant that the price was going up if there were more than 3.14 transactions per second on chain. That kind of got blown out of the window, blown out of the water with all the spam transactions. Because currently we're looking at 4.15 transactions per second. That is up a tiny bit from last week's 3.47 transactions. Even though I'm doing this podcast in the wee hours of the early morning of January 8th, 2025. So maybe those statistics will be a little bit higher in the afternoon. Obviously, there's a lot of the world that's asleep right now. But still, that's up from last week. And true to our observation for the history of this podcast, anytime the average transaction rate was higher than last week, the price was higher than last week. Again, just an anecdotal observation. I don't believe in charting, transaction analysis, or any of that voodoo. Not when it comes to Bitcoin, at least. But it has been an interesting observation that almost 4 years now, every Wednesday when we've looked at the on-chain volume, if it was higher than the last week, so was the price. And if it was lower than last week, so was the price. So again, they say causation and correlation. Correlation does not equal causation, but it's an interesting thing to look at anyway, even if we don't have a crystal ball, especially since nobody has a crystal ball. Speaking of on-chain activity, the Bitcoin mempool is still pretty full of transactions. Clark Moody's dashboard, with their slightly smaller mempool than mempool.space, is showing 133,823 transactions, up from the 117,000 transactions in their mempool last DCA Wednesday. Mempool.space is telling a slightly different story. Their mempool is a little bit clearer, a little bit more empty than last DCA Wednesday, with 176,502 transactions in their much, much larger mempool. Again, when you run a node, you have a default mempool size, and Clark Moody runs the default mempool. Mempool.space has gone in and tweaked their settings to allow for more transactions in their mempool, and so it's consistently higher when there are more transactions than Clark Moody can fit in his mempool. But either way, that's down slightly from last DCA Wednesday and down significantly from Christmas when there were 256,000 transactions in the mempool.space mempool. But if you need to send an on-chain transaction, it's still relatively cheap to do so. Clark Moody's dashboard seems to be overestimating this because I've been watching transactions come in, and the very last block had 1 sat per VByte transactions included in it, and multiple blocks today have had 1 or 2 sat per VByte transactions. Nonetheless, Clark Moody's fee estimator is saying that if you have an on-chain transaction you want to guarantee is mined in the next block or two, you need to include a fee of 6 sats per VByte. Still not that bad, but up from 2 sats per VByte last Wednesday. They are saying that a fee of 2 sats per VByte will be mined within a day, and 1 sat per VByte will be mined within a week. Again, in the last week, I've sent an on-chain transaction. I included an on-chain transaction with a fee of 1 sat per VByte, and it was mined in the very next block. So if you do have a very important on-chain transaction to send, make sure you have the most up-to-date fee estimate before you do, and also make sure that you're using a wallet that will allow you to change that fee. Or at least that you know how to use mempool.space's transaction accelerator in case we get a surge in transactions and a surge in fees where you don't end up with a transaction that doesn't confirm on time, or at least on your timeline. Mempool.space is still showing that a high priority transaction need only include a 3 sat per VByte fee, which works out to 40 cents in US dollar terms. Now I'm looking at mempool.space right now, and the last several blocks, well, the last block actually only included a 2 sat per VByte transaction. You have to scroll back a couple of blocks to get 1 sat per VByte, but still, I don't see anything higher than 3 sats per VByte in the last hour. I mean, there are blocks that include fees higher than that, but I don't see any blocks where the lowest fee paid was higher than 3 sats per VByte. Looking back for a couple hours now. So again, make sure, regardless when you're listening to this podcast, that you always have the most recent, the most up-to-date data before you make your decisions. I always get my data from multiple sources because you can see Clark Moody's dashboard and mempool.space are giving completely different pictures. I mean, Clark Moody's saying you need to pay double the fee, 6 sats per VByte versus 3. So don't overpay, right? Mempool.space is, however, saying that the lowest fee you should have for any transaction is 3 sats per VByte, whether it's a high priority transaction, a medium, a low, or a completely no priority transaction, as opposed to Clark Moody, where they do say that a 2 sat per VByte fee will be mined within a day. Again, do your own research. Make sure you have data from multiple sources, or at least a really good, reliable source that you trust before you try and lowball an on-chain transaction, especially if it's one that you need confirmed in a reasonably quick amount of time, a reasonably short number of blocks. We are now just 655 blocks away from the next Bitcoin mining difficulty adjustment. Last DCA Wednesday, it was looking like that was going to be a slight decrease in difficulty, but that was with only a few blocks mined. And it was, I said that, Bitcoin averages 2016 blocks. They take the average block time over 2016 blocks to determine whether difficulty needs to be increased, decreased, or left alone. And when you only have a few blocks in, because it's random chance, basically, you might have had the first 2 or 3 blocks take an hour, or you might have had the first 2 or 3 blocks come in within a minute or two of each other. And that might not be representative of the larger sample size. So now that we have a larger sample size, we're still, almost 5 days away from the next difficulty adjustment. But both the sources I'm looking at are pretty close to agreement. One saying it's going to be an increase of 0.89%, and the other is forecasting an increase of 0.9%. That's the first time I've seen those two sources agree that closely in a long time. So we guess we'll find out in about 4.5 days. It's looking like that's going to happen on July 12th. Again, that really only matters if you're a miner because it affects your profitability. As long as blocks are coming in close to 10 minutes, again, that's an average. So the next block might come in within a minute, or it might take 45 minutes. You just don't know. Random chance, right? So if you've got a transaction, you're waiting for it to confirm what the average over 2016 blocks doesn't really matter. All that should matter to you is when the next block comes in. So again, I digress. The reason we're looking at a slight difficulty increase is because over this difficulty epoch, blocks have been averaging 9 minutes and 55 seconds. And of course, that is faster than 10 minutes. So the protocol would increase difficulty if that holds to try and bring those blocks in at an average time of 10 minutes in between blocks. And despite the fact that we're only looking at less than a 1% difficulty increase, exahash, the amount of hash rate securing the network, set yet another all-time high. Currently, it's estimated that there are 748.3 exahash securing the Bitcoin network, and that is a staggering amount of computing power. Of course, just like the price of Bitcoin, computing power securing the network has gone up and to the right, which is one of the reasons why, Bitcoin is as secure. Well, it's the reason Bitcoin is as secure as it is, but it's also one of the reasons why Bitcoin has the network effect. If there were another coin that were to be magically, quote unquote, better than Bitcoin in some way, it would be next to impossible to spool up 748.3 exahashes of network power in any reasonable amount of time. If you could just magically turn 748.3 exahashes of power online, then obviously you could try and attack the Bitcoin network, but you can't. It's just a staggering amount of computing power, and that's really cool. And it's only going to grow as more miners come online, as newer generation miners come online, as more S19s and S21s replace old Antminer S9s. There's still a lot of S9s out there in places that have very, very cheap power at the price that Bitcoin is right now. Even those old Antminers are profitable for some people. And of course, there's plenty of people out there mining at a loss just because they want to support the network, or maybe they have a lottery miner where they don't expect it to hit a block, but if it does hit a block, it's like a jackpot. It's, like winning the Powerball, or at least winning the lottery. And quite frankly, you have a better chance of finding a block with an old Antminer S9 than you do of winning the Powerball anyway. So, and of course, there's plenty of you in places where it's really cold, like where I'm at right now, that are using old Antminers to heat your home. And then if they're not efficient as miners, if you're going to spend that electricity heating your home anyway, then maybe you are actually mining at a profit. So that's cool. If you're out there and you're mining or heating your home with a miner, DM me at BTC Bulletin Pod on Twitter, at BTC Bulletin Pod, or send me an email at bitcoinbulletin@protonmail.com and tell me your story, because I would be interested in talking to you if you are heating your home this winter with a miner or two. Real quick, I want to take a minute to thank those of you listening on your favorite Podcasting 2.0 apps, such as Fountain. Podcasting 2.0 allows you to support this podcast through the value for value method by either streaming sats on a minute-per-minute basis as you listen, or by sending a boost, which is a shout out via a Lightning transaction where you can let us know what you think about the podcast, let us know what's going on in your community, or even just say hello. But because it is a Lightning transaction, you are sending value back in the form of Satoshis. Again, those are both you do you things, whether you choose to stream sats or send a boost. You determine how much value you think you're receiving by listening to this podcast and contribute some of that back. And we do have several of you who've sent boosts or even streamed sats in the past. We do not have any boosts to read this week, but when we do receive boosts, we read them on the next episode of the Bitcoin Bulletin Podcast. So I look forward to hearing from you plebs out there. Speaking of plebs, our geographic distribution of listeners has remained the same once again this week. You know, we had a little bit of a shakeup with a country surging out of nowhere all the way up to the number 2 spot a couple of weeks ago. Currently, as it stands, the number 1 country where the majority of our listeners are listening from remains the United States of America. So hello and thank you to all my fellow Americans out there. We are just 12 days away from the inauguration of a new administration, a much more Bitcoin-friendly administration, allegedly. Of course, you know, it's time for them to put their money where their mouth is, but some exciting things happening. Hopefully, it's not too chilly where you're at, but even in Florida, it was 40 degrees this morning, which is unseasonably cold for a barrier island in the Atlantic Ocean. So it's definitely a lot colder in other places. The wind chill here right now is 4 degrees Fahrenheit, pretty darn close to 0 Celsius. And that's just too cold for me, especially since the wind is whipping at 30 miles an hour, which is just bone chilling. I was wearing long pants, a leather jacket, a snow cap, like a stocking cap, and mittens when I went for my walk earlier this evening. And it was just cutting. Somehow the wind was cutting through leather. It was chilly. So I can't wait to get back to the sunny Space Coast of Florida. And hopefully it's warm or warming soon where you're at, unless you like the cold, in which case, hey, you do you. The number 2 country, that's the country that surged out of the middle of, out of the lower depths of the rankings all the way to the number 2 spot last month, and that's Singapore. So thank you, hello, and thank you to all of you listening in Singapore, apa kabar. Number 3 remains Germany, so I guess Guten Tag, because it is the middle of the day in Germany right now. Dankeschön, mein friends in Deutschland. Number 4 remains Argentina, so buenos dias, muchas gracias amigos in Argentina. Number 5 remains Luxembourg, so Guten Tag or Morgen to those of you speaking Luxembourgish. To all my friends and listeners in Luxembourg. Number 6 remains Canada. I can only imagine how cold it is up there right now. If all the way down south here in New Mexico, it is as cold as it currently is. So hello, bundle up, stay warm to our friends in the frozen white north in Canada. And we got some news to talk about in Canada, but congratulations to those of you in Canada. Hopefully that was a giant leap for freedom for the great country of Canada. Number 7 remains our cousins across the pond in the United Kingdom. So good afternoon. Thank you to all of you listening to the sound of my voice from the UK. Number 8 remains Spain. So hola, muchas gracias amigos in Spain. Number 9 remains Australia. So hello to our friends down under in Australia. Thank you for listening in numbers that make you the number 9 country in the top 10. And number 10, rounding out the top 10, is Mexico. So hola, muchas gracias amigos in Mexico. Thank you to all of you listening, regardless of where you are listening from. We do have listeners all around the world. I can scroll through the stats and it's just country after country after country. We only have time to read the top 10. And after you get below the top 10, we start talking about less than 1% of our listener. So while there are 1 or 2 of you listening, almost everywhere I can think of, the majority of the people are in the top 10 countries. But we saw Singapore surge into the top 10 all the way to the number 2 spot. So if you're listening from somewhere that I have never read out, that your country's never made it into the top 10, all you have to do is turn 1 or 2 of your friends or family members onto this podcast. It won't take a whole lot of listeners to bump you into the top 10. I mean, just look at what Singapore did. So we look forward to maybe another country or 2 surging into the top 10. I'm looking at one specifically dangling down there at number 11. You're really close to Mexico. It would probably only take 1 or 2 new listeners to bump you back into the top 10, a country that's been in the top 10 before. But once again, I digress. Thank you to every one of you listening to this podcast. It is both humbling and flattering that we have so many listeners from all around the world who find value in taking their time to tune in and listen to this podcast. And hopefully you're stacking Satoshis alongside of us, because that is what it's all about. On to the news. And I kind of mentioned this isn't really news, but I alluded to this into the introduction. And that is, should you orange pill your friends and family right now? Should you be orange pilling or should you back off? And there's been a lot of conversation on Twitter. And of course, the number one retort usually is the meme or the quote from Satoshi Nakamoto, where he said, you know, if you don't get it by now, basically, I don't have time. I don't have time to waste on you. I'm butchering the Satoshi quote, but you know the quote I'm talking about. The most recent tweet I saw about this was Ben Justman. You know, he makes the peony wine. I think he's in Grand Junction or near Grand Junction, Colorado. So not too terribly far north of here, a little bit north and a little bit west, where I'm at right now. But he posted, I guess not this afternoon, yesterday afternoon on Tuesday, the 7th. He posted, "I'm done. I've decided to stop orange pilling from this point out in the cycle." And then it has the meme with the Chad and the normie, and it's been 3 cycles. Can you do at least 1 hour of research in Bitcoin? And the Wojak normie no coiner is saying, "No, I like being poor." You know, I spoke about this around Thanksgiving, and I spoke about this a little bit around Christmas. I don't think the bull run is the best time to orange pill newbies, because if the reason they're getting off zero is because you've been pressuring them, you've been just bombarding them with orange pills, we're going to get to a point in the cycle where at some point in time, maybe it's not now, maybe we're already there, where when we get to that blow off top and we have that historic pullback, as much as 80% is not uncommon. Let's say Bitcoin goes to 200,000 and has an 80% pullback, then, you know, that number would be a little bit higher than we're at right now. But if Bitcoin only goes to 150,000 and has an 80% pullback, well, then it's going to drop below 100,000. And if you finally orange pill your normie friends at 120,000 and Bitcoin drops down to 80,000, 60,000, they're going to blame you. And they're going to sell at a loss, because the only reason they got off zero is because you convinced them, not because they really believe it yet. And, you know, they haven't. One of the critical things to become a pleb, to become orange pilled, to become a maximalist, is they say first you hear about Bitcoin, you get excited, you buy a little bit, but then you do that 1,000 hours of research and you realize the genius of Bitcoin, the magic of Bitcoin, what makes Bitcoin so amazing. And they don't have time to have done that yet. So, and quite frankly, the people you're orange pilling right now, there's a heavy duty chance that they're not going to buy while you're having that conversation with them. But when Bitcoin really starts pumping, let's say Bitcoin hits 200,000, then they get that FOMO big time and they end up aping in right at the top. And then it stings. And then they might dump their Bitcoin and never try again. And they're going to blame you. That's just human nature. They're going to maybe not blame you, but they're going to resent you for it. So you got to balance that. I think the prime time for orange pilling, when I really pour the orange pilling on, is about 6 months before the halving. You know, I mentioned the history of Bitcoin and how if history repeats or rhymes, we're going to have the halving in a couple of months. And then within a year of that, we're going to be blowing through the top, just like we did, and maybe show them the charts of the previous halvings and say, you know, even if we are at the bottom end of the average of the previous halving cycles, you know, look where Bitcoin probably will go. The most successful way I've orange pilled people, though, is on down days. And I've looked at them and I said, you know, you have X number of thousands of dollars in the stock market or whatever you have in other investments. And what did the Dow do today? You know, went down 1.5 points. So if you were in the Dow, you lost 1.5%. If you put just 1% of your portfolio into Bitcoin would have to go to zero, and you still would not have lost as much as your portfolio went down today. That's how I orange pilled an 80-year-old family member of mine. I said, you know, it was a couple of years ago. It was when the markets were going down and the S&P was like off by like 20 or 30% from its previous all-time high. I said, you've lost 30% of your portfolio value in the last couple months. If you put just 1% of your portfolio value into Bitcoin and it 100x's, you know, it'll be your best performing asset you've ever invested in. And if it goes to zero, if it completely collapses, if it just goes away, you will have lost 1/30 of what you lost on an average on just the last couple of weeks on your regular portfolio. And that worked for them. And Bitcoin is way, way up since I first orange pilled them. I convinced them to buy their first Bitcoin at about $3,000. And I don't, just because they're boomers, I don't think they haven't really done the work to understand exactly they're definitely not technical enough to understand the minutia about why Bitcoin is so amazing, but they know I've been right, orange pilling them over the years, and they know that it's the best performing asset in their portfolio now. So if you are going to orange pill people, maybe try that. Just put 1% of your portfolio in, but definitely let them know that, hey, especially people you've already orange pilled really hard, even those that have turned you down, maybe go back to them and let them know that, if you end up aping in when Bitcoin is on a tear here, I know you've said no over Thanksgiving, you said no over Christmas, but when Bitcoin hits 150 or 180 or whatever it hits this cycle, and it really starts looking like it's just too good to be true, too hard to resist, if you buy in, expect it to probably crash, but just know it always has a retracement. But those retracements are like your stairs. They go up a little bit, and then, well, not your stairs shouldn't go down, but they stair step a little bit. They go up, Bitcoin goes way, 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 way up, and then it comes back down, but it never comes back down to where it was the previous cycle. And then it goes up way, way, way up the next cycle, and then comes down again, but it's still higher than where it was 4 years ago. And then it goes way, way up, and it's slowly but surely, if you zoom out, it's working its way up into the right. So fully expect that if you jump in at 200,000, it will probably go down. You need to be prepared to ignore Bitcoin for 4 years, maybe even 10 years, before you start staring at charts every day, because it's going to be really hard to write out the next crypto winner for the newbies, especially if they've aped in at the top. And your family members and friends better than I do. This is just a cautionary word of advice. I'm not saying don't orange pill people at all. Everybody that knows me knows I'm the Bitcoin guy. And the way I always leave it is that when you decide that you want to get off zero, I will be there to answer all your questions, maybe show you how to get your Bitcoin into self-custody, set up a hardware wallet, whatever questions you have. And that's where I leave it, that eventually everyone's going to buy Bitcoin. You get Bitcoin at the price you deserve. When you decide that it's your time, I'm there to help you out, because I don't want to make any enemies. It's easy enough to make enemies in the family since we just had a presidential election. Half your family probably hates you anyway because who you voted for or didn't vote for. So just keep that in mind. The big news that I alluded to, especially when I spoke about our friends up in Canada, is that Canadian Prime Minister Justin Trudeau has finally resigned. You're going to have a new Prime Minister. That is just really cool because Justin Trudeau is either extraordinarily incompetent puppet, doing the beck and call of the George Soroses of the world, of the WEF, of the World Economic Forum types, the Davos crowd, or he's just pure evil because, I don't need to tell you if you're listening from Canada, but he is done. And now it looks like you might have Pierre Poilievre, which would just be insanely cool because he's as close to anything as Argentina's Javier Milei that you're going to see elected into any office in a major country in the near future. And so that's cool. And definitely better for Bitcoin and freedom in general than what you just had. Of course, the mainstream media's take on this is it's just pathetic as usual, with headlines such as Trudeau resignation opens the door to Trump going easy on Canadian tariffs. So nothing about this big celebration that maybe Canadians will be free to speak their mind. Maybe if you have a peaceful protest in front of Parliament, you're not going to be debanked and have your vehicle registration suspended and your insurance revoked. Maybe this DEI nonsense about blocking the news content you can receive if it isn't from an ethnic Canadian, an indigenous Canadian. You won't be able to get the content unless they can find something that fits their DEI criteria, regardless of whether it's news from some other country or not. Just so many reasons to be glad that Justin Trudeau is gone. In an opinion piece on Fox News by David Marcus, he wrote, Trudeau exits the stage. Canadian truckers 1, Prime Minister 0. Yes, I lifted that from his opinion piece in my introduction. It said, Justin Trudeau's political career and reputation now lie in the dust bin of history. The frustration with the progressive status quo of globalism has boiled over. And yes, it has. We've seen that in more countries than one. We saw it in Argentina with the election of Javier Milei. We saw it right here in the United States with the re-election of Donald Trump. Of course, now we're seeing it in Canada. Hopefully, my friends, my cousins across the pond in the UK are going to see it sooner rather than later there, because the nonsense that's going on in the UK is just mind-boggling. But the tide has turned. The red wave or the orange wave is coming, and it's already washed over. It's already washed over Canada, the United States, and Argentina. Hopefully it'll wash over your country, regardless of where you're listening, if you're not already living in a free country. Speaking of Donald Trump, a lot of people are expecting Ross Ulbricht to walk out of jail 12 days from now. I want to caution you on this because the way it's going to be spun is on January 20th, when Ross Ulbricht is still in prison, they're going to say Donald Trump lied. And I want to warn you that even if Donald Trump signs that executive order the minute after he's sworn in, fully expect the swamp to slow walk this. The outgoing administration is doing everything they can to roadblock every one of Trump's campaign promises. We saw that again yesterday with Joe Biden passing a slew of executive orders to ban additional offshore drilling, to put restrictions on energy. And even if we didn't have a vindictive administration about to lose their jobs in 12 days, even on a normal day, the Department of Justice and the Bureau of Prisons have to sign off on pardons and paroles, and then they have to process the paperwork. And when a governor gives somebody clemency in their state, they don't walk out of jail that day. It could take days to weeks for the red tape to get processed. It would be like the governor giving a proclamation that you should be able to have a driver's license and then expecting MVD to just put one in your hand. If you go to MVD to renew a driver's license or to get a new driver's license, you're going to wait hours just because the government doesn't do anything efficiently. And in this case, I think they're going to drag their feet extra slow on purpose because this was a campaign promise from the candidate that they lost to, that their party lost to, because until Trump replaces all these administrators, and that's not going to be the first day, there's going to be some bitter Biden appointees in charge. And they're just, like when George W. Bush got elected in 2000, they pried all the W's off of all the keyboards, all the computers and typewriters in the White House, which was fucking hysterical, pardon my French. But the reason they did it was just to be jerks, to be vindictive, because he couldn't sign any letters. He couldn't type up any letters without George W. Bush. So expect that sort of shenanigans. So expect and hold President Trump's feet to the fire. One thing, whether you like him or hate him, one thing that most people that know him say is that he rewards loyalty. You scratch his back, he'll scratch yours. So I think he's going to remember. And this is one of his easiest campaign promises to keep because he doesn't need congressional approval to do it. He has the authority to do it. Nobody can say he can't. Nobody can block him. Nobody can prevent him from commuting Ross Ulbricht's sentence. So if he doesn't, either he's got Joe Biden level dementia and just forgot, or he's a jerk, and we should hold him to it. But I honestly think we're going to see that signed on day one. But haters are going to be saying that he lied, that he broke his promise if Ross Ulbricht does not walk out of that federal prison on January 20th. And I say, from the experience I know, on a good day, the Bureau of Prisons takes days to process release orders, and they have the right to do it. So don't expect him to walk free on January 20th unless, Trump really, really lights a fire. I guess we'll find out. We'll find out in less than 2 weeks. Okay. Again, as usual, a lot of the news especially on Bitcoin Twitter and even on MSNBC, whenever anybody's on MSNBC talking about Bitcoin, they always talk about the price. And of course, the price is down again from that $100,000 mark that we were at again just yesterday. Again, I say zoom out because on DCA Wednesday terms, we're actually up from last Wednesday. And I talk about Lena Seiche or Lena Seiche, depending on how you pronounce it. I still haven't gotten confirmation on how she pronounces her name. But the creator of the Little Hodler comics absolutely nailed it. Her comics are simple, they're clear, and they're concise. And I think they punch. Honestly, this seems like I might be blowing sunshine, but I think they punch with the same weight class as the intellectual heavy hitters like Thomas Sowell. And don't get me wrong, it's not the same, but her comics are in her own way as profound, in a way that's almost stealthy, because they're not stuffy, they're not wordy, they're not word salads, they're not academic. Sometimes it's just one frame or 2 or 3 frames, but it delivers a poignant message. And I think that she does so in a way that's far more appealing to the masses, because, if you quote Milton Friedman, he's got some important things to say, and plebs and maxis like to hear his quotes and cheer. But if you quote Milton Friedman to your normie friends and family, their eyes are going to glaze over. But Lena makes the same thing, the same exact point, cute and entertaining. Even a no-coiner can love her cartoons. And so she tweeted out yesterday her latest cartoon at the time, I guess. And it's a 6-frame cartoon. The first one is the hodlers and Bitcoin partying. They got the balloons, the confetti, and the disco ball. And he's wearing a big gold necklace. Bitcoin's wearing a big gold necklace. This is 100K. And Normie walks in and the party stops. And Normie says, "What?" And Bitcoin in the third frame goes, "I'm over 100K. And then the fourth frame, the Normie says, "Yeah, but you were over 100K last year," meaning 2024. And then the fifth frame, Bitcoin goes, "But I've more than doubled in a year." And then the Normie walks away saying, "Call me when you're at 200K or something." And even a lot of plebs, even a lot of us maxis now are disappointed with the price at 90, 95, 96 thousand US dollars, because even though it's only been over 100,000 for two DCA Wednesday purchases, we get used to new numbers. It's like when you have a paradigm shift in norms or things that are societally acceptable to talk about. We have that bar that we hold Bitcoin to, and even when we're maxis, we live in a fiat world, and we tend to set that bar at fiat markers. And so when Bitcoin passes $100,000, that bar gets raised to 100, and when it dips under it, that we kind of leave that bar mentally still there. So she captures it once again. Lena just absolutely nails it, and she says in the tweet with that cartoon, "Hope we can call him soon," and we will. I firmly believe we will. Maybe not 200K this cycle. Maybe a heck of a lot higher than 200K. I do not have a crystal ball. There's plenty of people making good, solid arguments why Bitcoin might even hit as high as $1 million. I've always said years ago when I was telling people what I thought Bitcoin would do, no crystal ball, but just my hopes, was that we would hit. Well, I thought we'd hit 150,000 last cycle, and we didn't. And I think we probably were on track to. There were a lot of things like the FTX explosion or the implosion and the collapse of all those interest on your Bitcoin scams, Terra Luna, Celsius, BlockFi, etc. That really, I think, put a bubble, pop that balloon of the last cycle prematurely. So maybe we'll make up for that this time. Who knows? I don't know. But I would have thought maybe 150 last time, maybe 250 this time. And after the 2028 having 2029 would be the first time we'd break $1 million. But I also wouldn't have thought that we'd be inaugurating a president that wanted to establish a strategic Bitcoin reserve in just 12 days. I honestly thought we were going to be in the and then they fight you phase for a lot longer than we currently are. I still don't think we're totally out of it, but at least for the next 4 years, it looks like the United States is going to be more positive, more pro-Bitcoin than they have been. And that's, I think, putting it mildly. Speaking of Donald Trump and speaking of change in the wind, on Monday, it was announced that Federal Reserve Chairman of Supervision Michael Barr will be resigning. With the headline in Reuters, with Barr's exit from regulatory role, Trump gets early chance to reshape the Fed. So he hasn't even been inaugurated yet, and we're already seeing a swing to a more Bitcoin-friendly regime. Reuters writes, Federal Reserve Vice Chairman of Supervision Michael Barr's decision on Monday to resign early from his regulatory oversight role sets up an early test of how Donald Trump will try to reshape the U.S. central bank during his second term as president. Barr said on Monday he plans to vacate his leadership role on the Fed's Board of Governors on February 28th, but stay on as a governor with a term that runs through January of 2032. The move leaves Trump no immediate opening to shape interest rate setting by nominating someone new to the Fed's board, but it does give him an option to quickly elevate a current board member to run the Fed's banking oversight function in a way more in line with his lighter touch preferences and avoids what could have been a disruptive legal showdown over political control of the role. Skipping over a few paragraphs here, it goes on to say Fed Governor Michelle Bowman, who has repeatedly staked out her opposition to Barr's tougher regulatory approach, is a likely pick for his successor under the incoming Trump administration, analysts say. Senator Cynthia Lummis chimed in on this yesterday, saying Michael Barr has completely failed to fulfill his duties as vice chair of supervision at every turn, enabling Operation Choke Point 2.0 and illegally increasing his power at the cost of Wyoming's digital asset industry. Think Avante Bank. Think all of the digital asset and Bitcoin-friendly laws that Wyoming had been working to pass in the last few years. She continues, "It's high time for the Federal Reserve to return to being accountable to the law, Congress, and the American people. We need a responsible regulator at the helm, and I am looking forward to working with President Trump to make that happen." So remember, Caitlin Long set up a fully reserved bank, and she was denied a Federal Reserve charter, and that was kind of part of Operation 2.0. And Michael Barr was at front and center in that. So even though he's going to be a board member, he's not resigning as from the board. He's not going to be in charge of. Well, he's not going to be the vice chair for supervision. He's not going to be able to make these executive administrative decisions, and so that is a relief. I mean, that is potentially a huge change. Speaking of the SEC and the Fed and government overreach and the government, then they fight you war against crypto. On Monday, Bloomberg ran the headline reporting that the Winklevoss twins Gemini to pay $5 million to end CFTC case. The article says the Winklevoss twins Gemini Trust Company, a cryptocurrency exchange, agreed to pay $5 million to end a Commodity Futures Trading Commission lawsuit claiming it misled the derivatives regulator in a bid to launch the first U.S. regulated Bitcoin futures contract. The proposed deal was disclosed Monday in a filing signed by both parties, avoiding a trial set to begin January 21st, the day after Donald Trump will be inaugurated for his second term as U.S. president. I'm interrupting here because, mind you, the 21st isn't time for Donald Trump to have made new appointments and to do anything that would have influenced the outcome of this trial. So Gemini was basically screwed. They had to basically cop a plea. Back to the article. Gemini, there's a heck of a creaking noise. The wind is howling. One thing about New Mexico is it is super windy. The wind just rushes out of the canyons of the mountains at night. It's like the mountains are breathing. Like in the daytime, they suck air in. At night, they just exhale, and the wind comes rushing down. Kind of like in California, the Santa Ana winds. Only here, the winds are bitter, bitter cold. And now we have that winter storm moving in, and it's just this house is creaking. I'm set up in a guest bedroom in a family member's house, and the house is pretty old, and it's just creaking. So if you're hearing a really weird creaking noise in the background, I've got my old microphone. I don't know. It's not as nice of a setup as I have in the studio, so I don't know if there's a distracting creaking, and their trash cans went slam and blew away earlier, and they're tucked into an alcove. I mean, it's impressive. The joke in New Mexico, because New Mexico and Texas have a rivalry, it's always, why is New Mexico so windy? Because Texas sucks. Sorry, Texas plebs. I know Texas is a Bitcoin state. That's the joke. I didn't write it. Some people say it's because Colorado blows. But either way, New Mexico is windy, and the wood is creaking and snapping and popping. But I guess you just get used to that if you live in a place that's this windy. All right, there's another big gust. So where was I? Gemini, which was founded by Cameron and Tyler Winklevoss, settled without admitting or denying liability in the case. Typical plea. In 2022, the CFTC sued Gemini in Manhattan federal court, claiming the exchange, quote, made false and misleading statements about how it would prevent manipulation in Bitcoin prices that were to serve as a reference for derivatives based on the cryptocurrency. A little bit further down the article, it says Gemini continues to face a suit by the U.S. Securities and Exchange Commission, alleging the exchange and the crypto lending firm Genesis Global Capital illegally raised billions of dollars in crypto assets from investors through the so-called Gemini Earn program. Remember that? Gemini agreed in February to return at least $1.1 billion to customers as part of a separate settlement with New York regulators. So hopefully that chapter is behind us. And of course, we have a much friendlier SEC coming in. You would expect even the Trump SEC to go after shenanigans and chicanery and fraud, but Gemini Earn was tied up in the whole Barry Silbert deal with investing, with taking people's Bitcoin and then using it to do that GBTC arbitrage premium, which was like free money until it wasn't anymore. And then when all that went sideways, and that's how a lot of these yield programs were getting the money, the yield that they were paying out or allegedly paying out, because if you were never able to cash it out, it wasn't yield anyway. But long and the short of it is, that's part of the shenanigans that's why I think the previous halving cycle didn't achieve what it would have without that black swan event. Back to the article. Gemini, which was founded by Cameron and Tyler Winklevoss, settled without admitting or denying liability in the case. Typical plea. In 2022, the CFTC sued Gemini in Manhattan federal court, claiming the exchange and the crypto lending firm Genesis Global Capital illegally raised billions of dollars in crypto assets from investors through the so-called Gemini Earn program. A little bit further down the article, it says Gemini So, of course, the future SEC chairman in the larger quote unquote crypto space is likely to, the future of the SEC enforcement in the larger crypto space is likely going to change dramatically shortly after the inauguration of Donald Trump as president. Again, that's just 12 days from now, less than 2 weeks. But again, it's going to take time, and expect even the Republican Party, because half the time Trump didn't get what he wanted done in his last presidency was because of Republicans in the quote unquote in his own party that were backstabbing him, like the Liz Cheneys of the world, the Mitt Romneys of the world, the Mitch McConnells of the world. So they're going to continue to make his life as difficult, if not more difficult, than the Democrats are going to do. But eventually he will have at least some positive impact, even if it means the government just isn't aggressive against Bitcoin for 4 short years. Speaking of winds of change, and speaking of Donald Trump, Michael Saylor tweeted out on January 2nd, Bitcoin is on the menu at Mar-a-Lago, retweeting a post from Eric Trump where it shows Michael Saylor and Eric Trump at the Trump residence in Florida saying, 2 friends, 1 passion, Bitcoin, and tagging Michael Saylor. So that's cool. I mean, at least it gives all the appearances that Donald Trump has not forgotten that Bitcoiners helped get him where he is, helped him win re-election, because if he intended to just blow us off, I mean, he could have done so already. He's won. He does not ever have to run for re-election again. He can't ever run for re-election again. So if he wanted to just blow off his Bitcoin promise, there's no repercussions really to him. What are you going to do? You can't sue him, and you can't defeat him at the ballot box because he's never running again. So the fact that Eric Trump and Michael Saylor met at Mar-a-Lago and then they both tweeted about it is encouraging, to say the least. Of course, the very next day, January 3rd, was the 16th anniversary of the launch of the Bitcoin protocol, 16th anniversary of the day the Genesis block was mined, the very first block that got the Bitcoin blockchain rolling. And of course, it is also celebrated as Proof of Keys Day. That is something that the completely disappeared from Bitcoin Twitter, Trace Mayer created. And the concept between Proof of Keys Day, when he first came up with it, was you needed to take your Bitcoin off of the exchanges on January 3rd as a way of testing that the exchanges really had the Bitcoin they said they had, that they weren't selling you paper Bitcoin. Of course, nowadays we say you're even then there were people shouting from the rooftops you shouldn't have your Bitcoin on exchanges anyway. I mean, this is well after Mt. Gox. People should have learned their lesson, but nonetheless, it's still celebrated as Proof of Keys Day. Maybe not because of, it's testing to prove that the exchanges aren't selling you paper Bitcoin, but because it's just a good day to remind people, get your keys off the exchanges, not your keys, not your coins. But either way, happy 16th birthday to Bitcoin. I know a lot of people consider Bitcoin's birthday to be when the white paper was released, but it was a couple months later when Bitcoin actually launched, and that was 16 years ago this week. For the second week in a row, we have seen multiple stretches of blocks being mined that included 1 sat per VByte transactions. I mentioned this in the statistics for a little bit when we were talking about on-chain activity and fee estimates for on-chain transactions. But if you're following us on Twitter, where we were at BTC Bulletin Pod, again on Twitter, we're at BTC Bulletin Pod. If you're not following us on Twitter, it really helps feed that algorithm monster and get us exposed to more people. If you do follow us, we don't pay for that blue check mark, which means we're effectively shadow banned. So the only way we can get boosted in the number of people that are going to see our posts is if we increase the number of people following us. Then people that follow you may possibly see our posts. But if you are following our posts, you'll see that on January 3rd, I tweeted out a screenshot from mpool.space where there were 4 blocks in a row that included 1 sat per VByte transactions, saying 1 sat per VByte transactions are confirming again. This is excellent timing for sending your Bitcoin to cold storage on Proof of Keys Day or consolidating those smaller UTXOs. So if you didn't get your Bitcoin off the exchanges, you're not too late. Fees are still relatively cheap. Maybe you need to spend a little more than 1 sat per VByte, but remember a time when 8 or 10 sats per VByte was considered a really good deal? It was $1.20 or $1.30 for a Bitcoin transaction as opposed to 40 cents. So again, I already covered that and I'm getting a little off track, but I guess it's time to continue to the DCA segment. So what makes today and every Wednesday special? That is because today and every Wednesday are DCA Wednesdays. And if you don't know what DCA is, if this is the first time you've listened to this podcast or you still have some questions, DCA is, of course, it's short for dollar cost averaging. And dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. For example, we're getting ready to make our 181st stack. We chose our equal portion to be just $20 US because I wanted to show that, well, first of all, a lot of people still believe you have to buy one Bitcoin. They think they're priced out. They don't know you can buy as little as $1 worth of Bitcoin. So if you're listening to this podcast and you're under the impression you have to come up with $100,000 to get in on Bitcoin, we're going to show you that you can get started with as little as just $20 a week. Or, if you're not the richest person in the world, if you're a hardworking individual and $20 a week is a lot of money, and you think maybe $20 is all you can come up with, and it might not even be worth turning just $20 worth of Bitcoin into Satoshis, into Bitcoin, $20 worth of fiat into Bitcoin, into Satoshis. I wanted to show that even $20 will add up. This is obviously a you do you thing. As I always say, Michael Saylor isn't out there DCAing $20, but we are. And in the 180 stacks we've made, we have stacked a grand total now of more than 10 million sats. That's 0.1 Bitcoin for those of you that don't do sats. That's 10,272,926 sats by just converting $3,600 US. $3,600 is a lot of money if $20 is a lot of money to you. And the fact of the matter is, by being consistent, by being slow and steady, even if you can only afford $20, over time, that's already added up to $3,600 of the fiat converted into Bitcoin. That's the beauty of consistency, the beauty of being steady and consistent. And that's what DCA is all about. And that stack at $100,000 is worth about $10,200. So we converted only $3,600 US, and we have a stack worth about $10,000. That's not too shabby. And of course, I think Bitcoin is going to go a lot higher than that. But the point being, when we do see hyper Bitcoinization, there's been estimates because nobody knows, how much Bitcoin has been lost. And of course, there are huge whales that hold a ton of Bitcoin. So you can't actually distribute all 21 million Satoshis evenly. But knowing what we know, roughly anywhere between 150 and 250,000 Satoshis per person is all anybody will hope to be able to save for their family one day when we do achieve hyper Bitcoinization. And if that's the case, if the average person out there is going to be hopeful to maybe have as many as 100 or 200,000 Satoshis in their name, if you've been stacking just $20 a week for the last 4 years with us, you already have 10 million sats, 10x what the average person will be able to squirrel away for their family when they finally get orange pilled or have no choice because the world's on a Bitcoin standard. We're going to grow that stack again today in this creaking, rolling house. And as usual, we're going to do that using the Cash App. Cash App is not necessarily the cheapest method for stacking sats. They charge about 2.25% for small purchases, which is a lot because, the evil empire, Coinbase, I think charges like 0.7%, but almost every exchange charges you to send your Bitcoin to your hardware wallet. Cash App does not, as long as you're willing to wait a block or two for them to send it to you. And so for small purchases where we're talking $20 and we're only going to have like 45 cents worth of fees, if we're avoiding a $2 or $3 mining fee, and I know fees are low right now, but the exchanges get to determine what the mining fee is, and they always go with the high end. So if we're going to avoid a $2 mining fee, that makes up for some of those higher fees that we're paying for purchasing. But I digress. Cash App is basically just a US company anyway. So for more than half of our listeners, you can't use Cash App anyway. So again, you do you. We're going to use Cash App. They're not a sponsor of the show. I do want to stress that. I just happen to think that they're an easy way, especially if you're going to orange pill your friends and families, get your newbies. They've got really super easy UX, and chances are your friends and family are using something like Cash App anyway. So we're going to use Cash App. I do have Cash App open, and I already have money fiat on Cash App because I was prepared to do this episode from an airport. Fortunately, I'm getting it done before I head to the airport. So it's just a matter of tapping Bitcoin, tapping buy. Hey, they'll let me tap $20. They change it up. I think it's to try and encourage you to do different amounts. Sometimes you can tap $20. Sometimes it's like 5, 10, 25, or 50 or 100. And I have to manually enter 20. But this time I could just hit $20. So I'm tapping confirm. And boom, just like that, we have stacked another 20,444 Satoshis. So more than 20,000 sats, more than 1,000 sats per dollar because we bought for less than 100,000 sats. Had Bitcoin been up at the 108,000 sat or 108,000 US dollars per Bitcoin that its current all-time high is, we would have gotten in the teens instead of 20,444 sats. So 20,444 sats is better than 19,000 sats any day and any way you want to look at it. Those 20,000 sats raise our stack to 10,293,370 sats now. And it does raise our average purchase price by about $125, $124.70 actually. So our average cost basis, our average purchase price is now $35,168.27, which is still a bargain when you're talking, we just stacked at about $95,626 to be exact. So almost, not quite 3x more than what our average cost is. That's not too shabby. Of course, as we stack every Wednesday, when Bitcoin continues to go up, that average purchase price is going to go up as well. That's how it is with DCA. You buy the highs, but you also buy the lows. So you buy the peaks and you buy the dips. But I think we've shown in the last 4 years, we've got a pretty good average price by being consistent, by not trying to time the markets, by buying every Wednesday on a fixed schedule. We've done pretty good, definitely better than we would have if we'd have YOLO'd in that first DCA Wednesday when Bitcoin was about 40,000 US dollars. So if we conclude our stacking right now, if nobody will ever sell us another sat or we just choose not to buy another sat, of course, at $100,000 being the benchmark, our current stack is worth $10,293.37. Not too shabby, considering we converted just 3,620 US dollars of the fiat now. When, not if, but when Bitcoin hits 1 million US dollars, maybe that happens this cycle. Maybe it happens in 2029. Maybe it takes longer, but it will happen eventually. Our stack would have a US dollar value of $102,933.70. A heck of a return for just $3,620. That will have made it the best investment anyone that you could have made, and you will be firmly called lucky by all your friends and family for having stacked with an average purchase price of just $35,000. When Fidelity's prediction of $1 billion Bitcoin comes true, and maybe that won't happen in our lifetimes, maybe it happens sooner rather than later with nation state and corporate FOMO kicking into high gear. But when Bitcoin eventually does eclipse $1 billion per Bitcoin, our current stack would have a value of 102 million US dollars, 102,933,700 US dollars to be exact. And that would put you into the category of those newspapers you always read about the kid that turned his graduation money into Bitcoin 10 years ago, and now it's got it worth $100 million. And you think, wow, if only, right? But all it takes is time, apparently, because, you are still early by by every metric. You are still early. And everybody I know that has been a Bitcoiner for more than 10 years falls into that category. And I firmly believe if you are just starting your journey today, 10 years from now, you'll be in that category as well, as long as you just stick to it. So that is going to do it for this podcast. I needed to keep it short and sweet because I am up against a hard stop, and I didn't do that. I didn't keep it short, but hopefully I kept it sweet. And we're in over an hour now. So I got to button up and get to the airport. Again, wish me luck. There is a big winter storm pushing through the country. So hopefully I don't get stranded in Dallas again. It's happened to me before. It won't be the end of the world, but I'm looking forward to being home and back on the Space Coast, on the central Atlantic coast of Florida. Either way, before I go, I want to ask you once again to help support the podcast, and not necessarily financially, not necessarily by contributing value for value, but just by feeding that algorithm monster. And the easiest way you can do that is by rating and reviewing this podcast on whatever platform you're listening. And of course, by following us on X or Twitter, where we are at BTC Bulletin Pod. And again, I like to hear from you. You don't need to send a boost. Send me a DM. My DMs are open. I like to hear from you, especially if you have something interesting to contribute. Like, are you heating your home with an Antminer? Are you from Singapore? And am I saying hello or greetings properly to you, etc. And of course, if you're not using X, if you're not using Twitter, we're also on Nostr. And of course, you can always send us a good old-fashioned email at bitcoinbulletin at protonmail.com. If you don't remember those, all you need to do is scroll down to the bottom of the show notes. There's some links down there. And of course, our Twitter and our Nostr and our email are in the show notes. If you just scroll down through the notes on whatever podcast app you're listening to right now. Hopefully, I said this last week, hopefully next week I will be back in the Bitcoin Bulletin Podcast studio. Unless something really major happens, I will be, because I'm getting on a plane in just a couple hours now. But either way, don't forget to join us next Wednesday when we grow that stack together. But until that time, keep on stacking those sats, you sexy sat stackers.